Now, another thing we have not mentioned yet on the program, today is the 10-year anniversary. Today itself, March 6th, of the absolute low in the S&P, 666 on the S&P, March 6th, 2009. Rick Newman, what were you doing in 2009? And it's kind of amazing that we're here 10 years later. The world has not ended, because I think in March of 2009, it felt like the world was going to end.
Might be surprising to you. I was covering it in 2009.
I was just a young pup.
You know what was happening right around that time? A couple of interesting things. So I think the Obama stimulus plan had just passed. It was actually unpopular among Republicans. It did not pass with strong support. It was not bipartisan. I mean, the TARP a legislation that got approved the prior fall, that actually did get approved finally with some bipartisan support, but the stimulus package didn't. And right around this time in 2009 is when we were starting to learn about the backdoor bailouts, the so-called backdoor bailouts that went through the Federal Reserve to AIG, to the trading partners of AIG. So Goldman Sachs got a so-called backdoor bailout. There were some foreign banks that got backdoor bailouts. We were starting to have hearings in Congress on this. And people were really getting upset because there had just been this massive flurry of government action, hundreds of billions of dollars going around. Nobody understands what's happening, except we're hearing that we're on the verge of a new depression and new bank runs. And then we start to hear, wait a minute, Goldman Sachs is somehow getting bought out at 100 cents on the dollar for its AIG trades and things like that. So there was a lot of dissatisfaction. Also, the one other interesting thing that happened around this time 10 years ago is Barack Obama, the new president, said it's a good time to buy stocks.
That is right.
And he turned out to be right.
That is right, yeah. And another thing that, you know, we talk about the market recovering since then, and you were kind of alluding to it, it was really, for the recession, it was really the beginning. I mean, the recession, the way that it impacted people losing their jobs, carried well into 2010, 2011. Yep. And so I think that from a market standpoint, an investor standpoint, we say, oh, 10-year bull market. But as we saw play out in the 2016 election, the recession wounds for people who are not steeped in financial markets are a lot fresher than this 10-year.
And also, don't remember to include losing your home. I mean, that was one of the hallmarks of this recession, is the record numbers of foreclosures and the people whose home values just plummeted and who found they couldn't afford those mortgages, especially the balloon payments and all the other abuses and bogus types of mortgages that happened. It was all just getting started. Also, quantitative easing was just getting started around now, and Jared Blicker was talking about this on air the other day. It took months, in some cases years, for people, even, you know, technical Wall Street people, to understand how quantitative easing was affecting the stock market. We understand now, but nobody had any idea the Fed could actually inflate the stock market the way it did without it blowing up, which it hasn't done so far.
Yeah, so far.
There's still $4 trillion on that balance sheet.